the streaming software, it's kind of a crash course. You don't get a lot of information on how to do that. So if the software is not overly intuitive, you have to learn along the way. So for a while, I didn't know that people could not come in and comment and it go directly through into the comment section on StreamYard. So I had to learn to go into like Facebook and change the stream because whenever it goes live in StreamYard, it changes automatically to a more private setting and it needs to be public. So you have to change all that fun stuff, uh, which right now I'm doing edit audience, public. Now I should be able to get the comments.
Okay.
Yeah.
So about
Oh,
do you play this by ear as far as time frame, or do you have a specific time frame you like to keep it in, or are we Joe
you know
Rogan?
what? If I've had some streams go for hours, I've had some go for 15 minutes. So it just really kind of depends on like
Okay.
if we get much engagement from the audience, if people have questions, if they, want us to, to see or engage or ask or answer questions, then obviously we'll sit here and we'll just keep riffing back and forth.
Okay. Well, my camera's here, but I'm looking at you here. So if I'm looking away, I'm actually looking at you.
So hey, it's all right. I'm all over it too. So you're good.
Okay.
Let's see. So we are live right now. I'm just checking all of the different streams to make sure that we are actually getting it done. So,
Have you been losing weight, man?
oh man, look, stress is a great diet. No, it's so I've lost probably better part of 30 pounds since we've moved here. But it's
Looking
just that
good though. I noticed that the other day when I saw you on Facebook. I was like,
I
man, you look
appreciate
like
it.
you're losing some weight.
Yeah, well, you just don't have access to the same good food that we have back in Louisiana, right? So I flew back just this weekend. It was an extremely quick trip. Had to pop in, handled some business, and then flew right back out Monday morning. But while I was there, man, you better believe I caught Southern Classic. So I got my three piece and I got my pepper and I got everything. So I was good with that, right? But you don't have that now. I mean, some restaurants down here call salsa season, and back in Louisiana, if you ain't seasoned, you ain't seasoned. So it's just it's different, So it's easier to make the healthier choices. Let's see. Yeah. So it looks like we're live. Got some audiences going. So
Oh, cool.
I'm just going to share this in with some of the groups that that we're a part of. And you know what? We can start diving in on a little bit of this as I stream. So
Okay.
there's that one. All right. Well,
Oh, and people text you comments too. Cool.
yeah. Well, and it's just because again that I don't want people to comment and then feel ignored because they're not getting a response when it's not that I'm ignoring them. I'm just apparently maybe not set up correctly, so I don't see it. So I try to still have that option right there. If somebody wants to give me a text, they can do that. I generally see my phone to light up.
Okay.
Well, I've known you for since we were knee high to a duck. So for that being the case, um, man, I tell you, you're doing all right for a guy from Provençal, just moving to the big city, and making it right.
Oh
Um,
yeah, the big city of Houghton. Yeah.
yeah. Well, and a lot of people they know that I'm from Natchitoches, but even more specifically, they know that I went to school in a small community called Provençal. But even more smaller, people might not know that we're from another community called Hagewood, right inside that, right? And we grew up. I mean, you were 3 hills over from me, so
Yeah.
we got to hang out until you moved to Baton Rouge, whenever you were a kid. So I'm telling you, it's weird how whenever you're seeing a friend from so long ago, and then you run back into each other like 20 years later, and it's just funny that you're both in semi-related business and
Yeah.
entrepreneurs at that, right? So that's been just great to kind of watch you grow over the years. And I remember you told me you started with a certain company that shall not be named. But you didn't like the high pressure sales, right? And then you went to another company and uh, went well enough, and then you started learning commercial, right? So then you got into property and casualty, PC, and decided you might as well just go ahead and open it up for yourself. So I think that again, that organic growth and how you took those steps. Congratulations on your success, and now
Appreciate
you've got your brokerage going. I mean, I know it's right there in Shreveport, in Southern Hills neighborhood. You've got your office right there. And how many agents are you working with right
I have four agents that work in the office, and then I've got I work with other brokers that do different things that
now? Okay.
I network with, like a care. Like I have a company I work with that if anybody calls us needing life insurance, we don't deal with that. We kind of stay in our wheelhouse. Like
Yeah.
when I first opened, I did everything because I needed to make the money, but I figured out that wasn't the best way to do things for my customers. So I kind of sharpened my sword and said, this is what I'm going to do. And
Yeah.
this is where we stay in this lane. And so I do work with others. So if anybody needs health insurance or life insurance, we do all that too. But in our office, I have four people who work with me that help me with the property and casualty, mostly commercial. And then we do auto and home too. But our main
Yeah.
focus right now is commercial insurance, and we do a lot of
Well, yeah.
real estate.
And that sweet spot is really, really kind of what made you successful, right? So it's all right to have ancillary business and other fingers in pies, but it seems like you really kind of cut your teeth and made a name for yourself in that, in the commercial business, which specifically is what we're here for tonight. And I've got to tell you, Wayne, insurance is really, really muddy water for a lot of people. And for myself included, there are times when I think I've got a grasp on it, and then I look at something and I'm like, well, I did not know this exclusion existed. Wow, that was kind of interesting. So it's the thing about insurance, it's always been interesting for me is you're betting somebody that you're going to suffer a loss. They're betting you that you're not. And it's kind of bass backwards. But
Yes.
then you start looking and you have a claim or you have an issue, and then you're so thankful that you have the proper insurance, right? Uh, with that, what would you say? And just before we start to get into a lot of the questions that have been submitted, so that we can go over that, but what would you say is probably one of the biggest challenges that you've had to date with a claim that you were able to be successful and help a client?
Well, I don't want to name any carriers, but some carriers are easier to deal with than others concerning a claim. And I know that whenever the carrier is not doing their job, it's a reflection of us. People think that we're in there, making these decisions, and we're not. And I don't try and put the blame off of, we take all the blame. Like if it goes well or if it goes bad, there's no point in us deflecting that. Or it's the customers don't need to be concerned with the process on that way. They just want to be paid. They want to be indemnified. So, there's a carrier that for a homeowner's policy, one of my longtime customers who sends a lot of her business my way. She's in real estate as well. And her own personal house had some damage done to the roof. Well, the adjuster came out there, and I looked with her, and I, before even filing a claim, looked and read her policy. Like, I'm the type, I will read the policy. I'm a nerd like that. I want to know what I'm selling to people because I don't want a surprise when a claim does come. So we went through it, and I found the language that said, yes, this is covered. And I showed her, and we both looked at it. Well, the adjuster came out and moved the goalpost and said, no, this is considered wind-driven rain, which is not covered. We're not going to consider this water damage. So there's only so much I can do with that. I tried to get another adjuster. We also tried to call a public adjuster. And I do have a public adjuster that I'll use. Now, a lot of insurance agents don't like using them because, it complicates.
They've got a
things.
reputation. Yeah.
Yeah, but I work with the carriers, but I work for my customers. My job is to have a balance between keeping a good relationship with my carriers, but also
Yeah.
making sure that I'm taking care of my customers. As an insurance agent during a claim, that can sometimes be a very difficult thing to do.
I like what you just said there. You work with the carriers, but you work for your customers. And, with everything that goes into that, I've got to say, very few people in business, right? Do they really look out for their customers? Because oftentimes you just see where it's like, all right, look, I got to get through this. I got to go to this. It doesn't immediately make me money right now. I can't focus on this. And the fact that you even reach out to public adjusters to help your customers, that's important because, you know, in Louisiana, I didn't even know public adjusters existed, right?
Yeah.
Until I moved and then I started meeting some of the public adjusters. And they say, "Yeah, no, absolutely. So we're going to get a share of what we get you." So if insurance reaches out and says, "Hey, look, here's your claim. We're going to approve $10,000." But it's going to cost me more than $10,000 to rebuild the house that just
Yes.
got demolished, right? You come in, you get a public adjuster, and they help. Now they're going to partake in some of that gain, right? But it's important to be able to have those advocates in there for you,
Yeah.
and that really makes me kind of start to say, because a lot of investors, when we get started in real estate, we're so focused on how do I analyze the deal, how do I make the offer, how do I do the contract, how do I acquire the property, that insurance, and I'm just going to be honest with you, it's a secondary thought. And there was even one time I bought a property and I was in such a rush, right? Such a rush to buy this property. I made just the slam dunk offer and it was a cash deal. And the seller took it. Well, I'd promised him a 5-day close. It was 4 or 5 day close, which means that I was calling the title company and I was rushing. I'm like, "Hey, look, I know I'm sorry to do this to you, but I really need this abstract pushed through and rushed. Can you get me this opinion of title?" Right? And they did. And I closed on it. The morning that I was set to close, because I pushed through the due diligence, everything, I was like, "Oh yeah, I need to get insurance." Duh, right? So I call up
Yeah.
my insurance carrier and I say, "Hey, I need insurance on XYZ." And they look it up and they say, "Hey, all right, great. So are you going to be taking flood insurance on this? You're going to be financing this, right?" And I went, "What?" So I
So
was in
flood zone.
such a rush, I did not check for the flood zone. Which, what does an insurance carrier, insurance provider do, or agency? They say, "Hey, this is no flood zone. We're going to end up requiring flood insurance if you have a mortgage." Well, didn't have that luxury. So thankfully, and we were just extremely lucky at this point. We had booked enough wins that we were able to just hold that asset cash and not have to take the flood policy, because there's been no proof of flooding. It's just that whenever I looked into it, the government had just blanket labeled this area as
Happens a
floodplain area.
lot.
Yeah. And unless I wanted to go and pay to have the study completed, which would be ridiculously expensive, they're not going to come back and do it. So I don't really have any leg to stand on to fight that. So it's important to really understand this. And as any investor gets started, I think that number one, learning some of the things about insurance will help them, such as, would you mind? And I know you've got some stuff prepared for us. Would you actually show us what an accord form is and why it's crucial for real estate investors to understand what the accord form is and understand it?
So an accord form, there are lots of accord forms. So it's not like there's one. You probably used to seeing one that's a certificate of liability insurance. That's probably the one you're used to seeing.
That's the one.
And
Yeah.
I am pulling it up right now. And I'm going to try. And here it is. I'm going to pull it over here.
Oh, let me go ahead and put you up on
Okay.
stage there. There we go.
So this is an example of a certificate of liability insurance. Now, this is probably the main ones you'll see because the banks are going to want to see this. And they're also going to want to see one that's evidence of commercial insurance. For one thing, the banks don't want to be sued. So they want to make sure you have liability coverage, and they want to make sure that you have on your commercial. This is evidence of commercial property insurance. They want to look. Let me see if I can blow this up a little bit. They want to make sure that the limits here, which this is a blank one because, I didn't want to pull up one of my customers' ones, But this one, it'll tell you like they're looking for a certain amount. So if a bank is saying it's got to be insured for such and such because that's how much we're financing it for, they don't care if you have replacement cost, actual cash value, as long as it's covering their loan, then that's what they want. And they want proof of insurance. Most of the time, they just want to make sure that they're covered. They don't care they don't care if you have bells and whistles or anything like that, as long as they're taken care of. And so,
Wayne, if I can stop you right there, would
Yeah.
you give me a quick breakdown of the difference between a cash value policy and replacement value?
Yeah, in fact, I have a slide for it. I will, and I'm going to be honest with you. I found a better online. I found a better chart than any of them I could come up with. So let me get to it. So this right
why don't
here.
you go ahead and take us? Well, tell us a little bit about your agency. I know we just kind of hit it at a high level. I don't want to take you out of order of your slides.
Yeah, not a problem. We have like I said, I have 4 people who work in my agency who help with the P&C stuff. 4 ladies, they're great. They all do different aspects of insurance there. They all have their own roles. Combined, we have 50 years of experience in the agency. We're licensed in 6 states: Louisiana, Texas, Arkansas, Oklahoma, Tennessee, and Mississippi. We don't write auto and home in all those states, but most of that is for commercial reasons. Like commercial properties we'll write, but we only write personal lines in Louisiana, Texas, and Arkansas. But Oklahoma, Tennessee, Mississippi, I have plenty of carriers there for contractors and real estate investors and stuff like that. And one of the things that we focus on, we have a couple of wheelhouses, and one of our biggest ones is real estate investment. So we understand that the unique risks that there are involved in that, and not one property is the same. So that's where we are, and that's why you called me, because this is one of the main things I do. So
Exactly.
But to go over property coverage for actual cash value, it's depreciated. So this is an example I found online, and I was going to create my own graphic, but I found this, so I didn't want to reinvent the wheel. This right here gives an example of, let's just say you have estimated damages on your house of $175,000. That means there was a lot of damage done. Let's just say, for the sake of this example, you have a $2,000 deductible. Now in Louisiana, that's considered a low deductible. Like a lot of carriers are going up to a percentage-based deductible now. So it'd be the percentage of whatever your coverage for the dwelling is. So let's just say in this case, you have $92,000 in depreciation. In other words, this is something that is now, in the case of homes, a lot of the times they actually build equity, but let's just say you have a double wide trailer. That is going to have depreciation most likely, depending on the age of it and the build. But right there, let's just say from the replacement cost, there's a $92,000 difference there. In other words, if you have an actual cash value, they're only going to pay you what it would cost to rebuy that exact same year, make, and model of home. I'm talking about for like a mobile home, even for a house. A lot of the times. What's that?
Oh, I was just going to say, so for example, because manufactured homes typically are not appreciating assets in a lot of areas, right?
That's exactly
it's more so the land under that manufactured home that appreciates more than anything. So let's, if we go in here, you're telling me that if I had $175,000 worth of damage, and that, let's say the manufactured home is at about half life, right? And it depreciated $92,000. They're only going to give me, on $175,000 worth of damage, they're going to give me $81,000.
Yeah, there's non-recoverable depreciation in that. So your final actual cash value payout would be $81,000, which means you've got a gap there. Your damages were $175,000. They're going to pay you whatever the value at that moment of loss, what that is. Kind of like a car. When you buy a car, most car policies are all actual cash value. They're going to pay you the Blue Book, Kelly Blue Book value at that time of loss. you're not going to get what you paid into it unless you have replacement cost or agreed value on it. But on most homes, you want, even site build houses that build equity, you still want replacement cost, because if you have actual cash value, they're going to consider what the house, they're not going to look at any improvements or anything you did to it on actual cash value. They're just going to look at the bottom line. And a lot of the times you're undercovered. Now, if you're buying $20,000 to $30,000 houses in Homer, Louisiana or something, you may just want ACV, and you may risk it on something like that. But if you're buying homes that in a pretty good market area, you're going to want replacement cost. So the final payout would be $81,000, but you need $175,000. So you're going to have to come up with the difference on that if you have an ACV house. So an ACV coverage on your house. So I do not recommend on a home, when a house qualifies for replacement cost, I would always go that way. Now, sometimes houses, you just cannot get replacement costs. There a couple of examples are, if the house is going to remain vacant, they're not going to want replacement cost on a long-term vacant home. Or if you're doing a builder's risk, most of the time you're going to have to put an actual cash value on something like that. Or actual cash value if the house is in disrepair, or if it's really old and not kept up or something, they're going to want you to put actual cash value on it. And then once you get the house up to date, then a lot of the times, at least we do at our agency, a lot of your agents will say, let's get the house put to where it needs to be, and then we're going to rewrite this on replacement cost value. So the difference is on a replacement cost is, let's just say the same exact thing, $175,000 in damages, and you have a $2,000 deductible. There's still that $92,000 depreciation because it's the same exact house. So the actual cash value payout is going to be $81,000. But on replacement cost, you have $92,000 in recoverable depreciation, which will bring it up to $173,000 on damage of $175,000. Because you have that $2,000 deductible. Now, whatever your deductible is, if you have a $10,000 deductible and your damages were $175,000, you get $165,000 back. So that's how that works. So in a lot of the times, if people are complaining about rates, which I know rates in Louisiana and I'm sure in Florida are real high for insurance, a lot of the times I would prefer to, I tell my clients all the time, if you need to cut somewhere, don't cut on coverage, but raise your deductible. Because even if you have a higher deductible, you would still get more back. If you look at the replacement cost, let's just look at that where it says $2,000, let's change that to $10,000. Instead of getting $81,000, at least you would still get $165,000 back, which is still way better. So I say that's one way. If you need to change, if you need to lower your rate, do not sacrifice the value of the home. Bring up the deductible and you'll still get more back. So
in my experience, Wayne, and tell me, is it really just that big of a difference for, let's say, apples to apples, same house, actual cash value, same house for replacement cost value? What would you say? Is it like 50%? Is it 100% more for these policy differences? Or is it a little bit more reasonable?
So it's normally not that big of a difference, but it depends on the house. Yeah. Normally you can get replacement. I'm going to throw out at the average home that we sell, maybe about a $2,500 premium on homeowners insurance. So, and that's on replacement cost. So if you decided you wanted to get actual cash value instead, you're probably only going to save about $800. Maybe you'll get that same house for $1,700 instead of $2,500. But it's a big difference. And if you ever have a claim, you do not want to have an actual cash value if you can.
That's not the time to find out you're underinsured.
Right. If you cannot afford that premium, you cannot afford the claim. So I would say lower. And I'm still in that.
That's good right there, man. Like you need to, that's your slogan. If you can't afford the premium, you can't afford the claim.
Well, I'm going to give that props to a guy named David Carruthers. He's actually in Florida, and he works in commercial insurance, and
How
he's a
about the
guru
David
of
on
this
that one?
stuff. So
Wow.
I listened to a lot of his stuff, and he made that point years ago, and it stuck with me. So I
Yeah.
don't want to take credit for that, but it's true. Working in this, I would say
Well,
have a higher deductible if you
yeah.
have to cut somewhere. Don't lower your coverages.
Well, and in the spirit of that, let's say that we go and we line this out. I know that you're going to get that certificate of insurance over to me, that accord statement, but also, why don't we talk about this to where what's an insurance binder for anybody that's looking to get started and they've never called somebody to bind insurance, and then I've got a follow up question for you on that after you explain a binder.
So the binder is basically the policy encapsulated on 1 or 2 pages. It basically tells you the highlights of the policy. It'll tell you exclusions, deductibles, coverages, all the endorsements and riders you have. The binder is what's also going to show if you have an additional interest or a mortgagee, it's going to show them on there as well. So the binder is going to basically be the summary of your policy. It's not going to go into details. You're going to have to read the policy if you want to know details. But it's basically kind of like the bridge notes. Those books we used to buy in English class back in high school when you didn't want to read the whole book. It's kind of like what the binder is. The binder is basically 1 or 2 pages that give you the details of that policy. And it's something that a lot of the times if you have a bank or something, they're going to want that.
Now, another follow up to that, Wayne, is there a time when a binder is issued? Is the investor or that property still vulnerable if there's only a binder in place, or is that binder, if so facto, the proof of insurance?
Well, the binder is proof of insurance. If you need to make sure that it's got a policy number and an effective date on that binder, because if it has a policy number,
effective date.
Yeah. So you want to make sure that effective date is on the date you want it to be, because if you're buying a policy and the effective date's a week out, but you needed it today, then you don't have coverage, and you need to say, hey, we need to change the effective date on this. So yeah, is that binder will tell you this is the day your policy will start. This is the day the policy will end, assuming it's paid. The premium's paid. It will cancel if it's not paid eventually. And then if you have a policy number, as long as you're not dealing with a fraud, what you're getting should be at face value, should be good enough.
Okay.
A lot of the times, then that's what these certificates of insurance, the accord forms I showed you earlier, that's also what that is. So like if the carrier has not issued their binder yet, but you do have confirmation that it's bound, now you can get in trouble. An agent can get in trouble if they're giving out fraudulent binders. So if you have someone doing that, and it does happen, that's why you need to trust your insurance agent. So, but we will never submit an accord binder unless we have proof from the carrier that this is a bound policy. Even sometimes it takes them a week to issue their binders. So in that case, if you need something that day proving that you have insurance, we'll go in and we'll fill out an accord and fill out everything that basically would be the same thing that would be on a binder, or some people call it a declaration page.
Okay. And, all right, so we've got the deck page, we've got the binder. Well, how do we know what policy is going to be the right fit, right? So let's talk about as far as, for a rental property versus a flip where it's going to be worked on, it's going to be vacant, it's not going to be occupied. What are the types of insurance that you would recommend for each type?
So there's a different policy if it's tenant occupied from one that is just vacant and not being worked on, and then one that is vacant but being flipped. It's called a builder's risk policy. I've got some information on that. Let's see. I was going to go through some of this rental income. These are some things we can go back to. Here's the vacant property I want to go over first. So vacant properties, if you don't have the right type of policy on your home, a claim could be denied. Let me give you a real life example from one of my customers. She was living in a house in Greenwood, Louisiana, and she moved to Iowa, didn't let us know. We still had it insured as a home that she was living in. So someone steals her pool. She has an above ground pool on her property. Someone steals it. Well, if someone's living there, it's really hard to steal the pool. I mean, it takes some time. So unless someone's on vacation, anyway, it came to we didn't know, and she didn't tell us. And we normally call our clients at renewal and make sure that everything's up to date. But she moved to Iowa, didn't let us know. We had her house insured as she was living in it. Someone stole her pool, and she was denied coverage because the house was vacant, and the house was now written incorrectly. So
wow,
that's why it's very important. So for example, if this house was written as a vacant property, then we would have had to have changed the entire language of the policy, and we would have had to have included vandalism and malicious mischief on there, or theft. On a homeowner's policy, and if you have a good homeowner's policy, that's automatically included. But because she moved out, they said, well, this policy is not written correctly, and they denied the claim. So anytime something changes about a house, you want to update your agent, because you don't want to wait until a claim happens to find out that your house is written incorrectly. And it may have been written correctly to begin with, but if the agent's not notified, then they're not going to know to change it. So, and that's what it says. Number 2, higher risk for theft and vandalism or malicious mischief. That's when a vacant property is kind of like open season for someone who's wanting to steal or wanting to vandalize, because there's less resistance.
Well, I can tell you that I've actually had properties vandalized by tenants before. So even my rental policies, had that. And that actually brings to mind yet another question. It's like I've got a list of them for you, right? What about some of these riders, some of these, exclusions to avoid? Because I know, for a standard rental dwelling policy, you might not have some of the protections, mold, mildew, wind-driven rain, some of these different things, right? That could protect you in the event of a negligent tenant. And I've had tenants literally go and, as they were getting evicted, take and pour paint, like a gallon of paint, just because we had just remodeled the place and the contractor left the paint there so we could paint match in the future. But nah, it is what it is. But literally take the paint can, pour the paint over the window units, brand new window units in the property, and then right there on the landing by the front door. And there were footprints of paint just going up into the unit that they were being evicted. But then the downstairs tenant decided they wanted to get in on the action too, and they walked paint into their unit as well. Needless to say, ended up evicting both tenants. But that being said, my insurance company came through for me. Right?
Good.
So what are the different, what riders, would you encourage somebody to have on their policy?
So I would encourage someone who's got a property that has a tenant to have what's called a dwelling policy number 3. That doesn't mean anything to most people, but policies are on forms. In other words, you have basic coverage if it's a 1, dwelling 1. You have broad coverage, which covers a little bit more stuff on a dwelling 2. Dwelling 3 is going to be comprehensive. So you want to make sure that you have what's called a DP3. If you say that to an agent, most agents are going to know what a DP3 is.
No.
You're going to want to make sure it's replacement cost on there, because a DP3 should, and some carriers don't. I will tell you, we used to write with a carrier that used to be owned by Sears. And I'm not going to say the name. If you know history, you can figure it out. But we had a DP3, which we thought was comprehensive coverage on this. Well, my friend who owned that property, they had vandalism on it. Well, this company, they exclude vandalism on their and theft on their properties unless you pay extra. So we went through all that. Yeah, and I knew that though. But if you don't know that, you don't know what you don't know. Thank God I knew that, because, I know that we're all wanting to cut costs, but I was like, if you're going to cut costs somewhere, dude, let's give you a higher deductible. you need this. Well, he had to file a claim. He did have, apparently it happens more often than, I hear about it a lot, where vandalism from your tenants is more likely to happen than vandalism from a random stranger.
We've had that, yeah, and I would be inclined to agree with you on that one.
And so you want to make sure that even if it says DP3, you want to challenge your agent, because some of them might take for granted that because it says DP3 that something's included, and it should be included. But these carriers, they all do their own things. They like to exclude things. They have funny ways about themselves. And your agent will most likely, if they write a lot of policies with a certain carrier, they're going to know, or they should know exactly. They should have read the policy at least once to know what they're selling to people. Because you're dealing with people's lives, and you don't want to give somebody something that is not going to cover what they need. So in that case, that one carrier, if we wouldn't have added an extra thing, and it could come off as, oh, you're just trying to gouge me or upsell me more. Well, I wouldn't try and upsell that to you if it was already covered on the policy. So you want to just make sure, because that is something that is not on every, even DP3 can exclude things that you think would be on one. So always challenge your agent to ask them, hey, I need to make sure that this stuff is covered. And tell them to highlight in the policy where you can read it yourself instead of taking their word for it. I've done that so many times for customers, where I've gone through and highlighted and emailed pages of their policy to them just to make sure they knew what they were getting. And I get people also
because you just enjoy looking at those policies.
Well, most people hate looking at it. I don't always like looking at it, but I like to be able to look at myself in the mirror and know that I take my job seriously. So, there are some agents who, and mostly for personal lines, they're just writing their auto and home, and it's mostly newer agents. They don't really know all the ins and outs about it. But then they have a bad claim, and that's what gets a lot of agents to start slowing down and learning their policies. And so, when I started out, I can't say that every policy I wrote that I understood. When I started out in this industry, I was learning. I was just learning, and I just took it at what it's worth. This is a homeowner's policy, so it's going to cover this. Well,
it's almost like they're designed to be confusing.
Yeah, they are, because they're written by lawyers, and I love insurance. I believe in insurance. I have a lot of insurance, but I also hate insurance. I hate the claims process. I hate how it's become a fight to make sure that people are properly protected. Even if you think they are, sometimes they'll move the goalpost. Like I said earlier in my example, you can only do so much.
That's also why it's more important to have somebody like you, like these insurance agencies and brokers out here that actually do fight for the client, right? And
yes,
like you said, you work with the carrier, but your customer is who you really work for.
That's right.
And I think that's a great thing to have. So one of the, and just to keep going through that, because to a lot of people, this might not be a very interesting topic. For me, it's something that I think you and we could probably go for a few hours on this topic back and forth. But I want to go down the list of the questions. Otherwise, we're just going to sit here and keep going all night. And I've got to say, I do admire your passion for that, because I've seen people that are just here for a paycheck, and that's prevalent with real estate. I see agents that don't have a passion for it. They have a passion for the check. They don't care about creative deal structure. They don't care about the protection of their clients. And it's refreshing to see people in other industries that do have that passion, right? And
I was a pastor for 14 years. I'm not a high pressure salesperson, and I discourage my team to be. And in fact, we don't cold call. We don't have to. We get referrals, and if we can help someone, we will. We refer out a lot if we think somebody can help them better. I'm more of a teacher than I am, and I try to be more of a consultant. Just like you have a CPA, you have a lawyer.
That's right.
I try to be in that rank and not a commodity, like, go up to the storefront, walk in and buy a policy and never talk to the person again. I take our firm, our insurance firm, is more of a along the lines of a professional consulting type of agency, and we are not real. I mean, we love hitting the numbers, and of course, it helps to make money. But I feel like it's even helped us make more money just from being real with people. You know, because there's people I can't help and I don't help that they'll send me a lot of business just because I was real with them about that.
Well, and I think that that's really where you kind of make a name for yourself when other people are referring business to you, right? And
Yes.
going back through some of these challenges, right? So we've talked about insurance, the proper levels of insurance for vandalism, and some of the claims that you're going to have. And I promise you, for any real estate investors or soon to be real estate investors watching this, it's not a matter of if you have a claim, it's a matter of when. Literally earlier this year, I thought everything was just going great. We're having our standard April showers, to bring in those May flowers around Shreveport Bossier. And I'm just sitting here hanging out one day, and then I get a text from one of my tenants. Very few of my tenants actually still have my cell phone number, but she's been with me for a hot minute, right? And she reaches out and she's like, "So the garage just got crushed by a tree." and I just went, "You mean a tree branch hit the garage?" And she's like, "Nope." And she sends me a photo, and literally that detached garage was just flat, and it was. That tree had laid down on it.
So the
So,
roots were out and everything, huh?
oh yeah, I'm telling it
Wow.
was a really big expense. And shout out to Sam Arminio. He jumped over there and got that cleaned up for us. I mean, he was great with the cleanup. But thankfully, my insurance company, they came through, and shout out, right? So I just
Yeah.
want to say it's awesome to have people that make the claims process easy because it's already stressful enough when you're sitting here and you have to make sure, like, all right, are my first and foremost, are my tenants okay? Was there any loss or damage to life? Because nobody wants that. I don't care. Well, I would hope nobody wants that. Um, it's real estate investing. We're in it to make money, but also we're in it to make money in a good moral sense of things, right? We don't
Yeah.
want to do that at the expense or injury to others. So properly having the proper insurance, we even tell our tenants, and it's part of our lease, that they have to have renters insurance. And it's only like 20, 25 bucks a month for the
Yeah.
content policy. But if something were to come along and destroy the dwelling that they have, right? So if a tornado comes, then, God willing, they're not home at that time and it just was a total loss. Yeah, my insurance is going to cover me, but it's not going to cover them. So
That's
we try
right.
to make sure that they're educated in that space and say, "Hey, look, you want to have your contents policy." But
And you want to require your tenants to send you
oh,
certificates
we
of
do.
insurance.
That's
Yes.
right. We actually upload it to our management software,
Yeah.
and it's just it's another not only protection for us, but it's also peace of mind for them. And
Yeah.
with that, what coverage gaps do investors commonly overlook when they're purchasing any insurance for their investment properties? And kind of
So
a follow up to that, what are some hidden clauses to kind of be on the lookout for?
you want to make sure you have loss of rents coverage because that's not always something that's going to automatically come on a landlord or dwelling three policy. Loss of rents is going to help you whenever there's damage to the property and it becomes uninhabitable.
Yeah,
That means at that time you're not getting rental income if your tenants aren't living there, or if you're a good landlord, you're not charging them for rent on a house that they can't live in. So your insurance will pay you during that loss of rents time while the home's being repaired. So you want to make sure you have that. Another thing I would say is I'm going all over the place. So like
and
flood
while you look
insurance.
for that content, that loss of rents, you have a stronger argument for the loss of rents by having a written lease with your tenant. Is that correct?
Yes, yes. So if you it'll be proof of how much that they're going to pay out. It'll show this is how much you're paying in rent. So they're going to, because insurance is about indemnifying, not about making extra money. So
That's right.
there, you can maybe you charge your tenants $1,000 a month for rent, but you're telling the insurance company we charge them $1,500 rent because you're trying to make an extra $500 a month that they're out. Well, it doesn't work that way. So you need to protect yourself. Everything goes through an adjuster, and everything's going to be scrutinized, whether it's a property damage.
And that's also called insurance fraud. So
yeah,
for the listeners out there,
that's definitely a prosecutable offense. So you do not want to do that. You want to have some integrity in the game, because insurance. If you ever watch true crime, it seems like half the crimes are about.
Can't help it with my wife controlling the TV remote, right?
Yeah.
That seems like that's. Sorry, Kathy, if you're watching this, but that's the majority of what's on.
Well, a lot of that's about insurance fraud. Life insurance fraud for killing people, or burning down a house, getting the insurance on the home. So they investigate all that stuff, and sometimes it's a big pain in the behind for them to do that, because sometimes it can work against you, and it can be frustrating. But also, I think there needs to be a better balance. But ultimately, they're going to check out everything. So everything, if you can document everything, just for your tenants, you want to make sure they have an inventory of their stuff. If they have renter's insurance, they're going to need to have some kind of a figure about what they're going to get paid back, what their losses were. You can't just tell them, oh, I had a $50,000 piano, grand piano in the house, and then it's just like this little, $500 organ. They're gonna want receipts on stuff.
Yeah.
So,
or $100,000 ring that came from a bubblegum box. So yeah, it's the sentimental value.
They don't care about that. They want to know what they're going to be able to do to indemnify you. So,
well, Wayne, one of the things, and unless you've got more stuff to kind of really, you've got the riders slide up.
Yeah, so, I want to touch on some. So flood insurance. Now, not everyone needs flood insurance because they're not in a flood zone. But I will say this, because I'm obligated to, and I'm an insurance agent. But if we look at what just happened in North Carolina, and in East Tennessee, a lot of those people were probably in 100 or 1,000-year flood zones. Yeah. And a lot of them, I'm sure, did not have flood insurance. And because of that, I'm afraid that a lot of these homes are not going to be rebuilt with insurance if they didn't have that. So it may be something you'd want to consider. A lot of these people are in the mountains, and they're thinking, why am I going to buy flood insurance? That's my thought. Like, I wouldn't try and pressure someone into buying a flood policy if they're in the mountains, but I would give them an example that they never know. It's my fiduciary responsibility to at least drop that flood. You might need flood insurance no matter where you are. Whether you buy it or not, it's up to you. But that's an important thing. That is, flood coverage is not covered on a homeowner's or a landlord dwelling policy.
So with that, in the event of an absolute, natural disaster like what they went through, now nobody would normally think, like you said, flood insurance, right? Would the government, or does the government with FEMA, step in to help with that? And is there certain limitations with that? Or is that kind of like outside of your wheelhouse? Yours is the insurance property, not necessarily what's covered outside of it.
So FEMA will write the flood policies, but if you don't have one, you're up to the mercy of what the government's going to throw at you. I don't know. $750. Is that gonna rebuild your home? That's gonna maybe buy you 2 weeks worth of groceries that you lost. That's about it, But yeah, I don't know. Like, it's not consistent because they were paid a certain amount down in New Orleans back in 2005. Yeah. And now it's different. It all depends on what the administration and what all they decide to do. I don't want to get too political, but I do want to say
we don't do that here.
Yeah, and it's not consistent. So the only way you can be guaranteed that you're indemnified is if you can get one private, or you can get one through FEMA, a flood policy. Private flood policies are a little bit more flexible as far as in how much coverage you can give. They also normally don't have as long of a waiting period. If you're buying a FEMA flood policy, there's a 30-day waiting period unless you buy it with the closing of a home. So if you're buying it and you already own the home, you're going to have to wait, because what happens is people know that there's a hurricane or a flood or something coming, they're going to buy that policy. That's why there's a waiting period. So you want to make sure that if you're going to get it when you don't think you're going to need it. And a flood policy, if you're not in a flood zone, is probably, it could be anywhere between $300 to $600 a year in Louisiana. Now, every state regulates prices differently. So, but just based on what I've written, I know that if you don't need flood insurance, it's cheap. If you need it, it can be very expensive though.
Exactly. And that's where I tell people, personally, we do our best not to buy in flood zones unless I'm just rushing through a closing and make a mistake, right? But I think that absolutely, and there does come a point to where you're overinsured, I feel, for what it is. So you have to really kind of work with somebody like yourself that's in that role of a consultant to say, no, I feel like this is where you really need to be for everything else. And that kind of comes to mind, probably my last question for you, and then I'll let you, say anything else that you'd like to add. Is how frequently would you say real estate investors or just people in general should visit with their policies? Is it semi-annual, or is it dependent on the size of the portfolio that they're insuring? And then also, at what point, if ever, would you recommend somebody look into like an umbrella policy or something for to lump all of their properties together?
So yeah, those are good questions. So the more properties you have, the more likely you're going to have a claim. I would say if you're not the type to call your agent every time you buy a house or every time you sell a house or every time you have a tenant move out and you don't have anyone immediately moving in, if you're not that type of person, but you have a lot of properties, maybe once a quarter, set up something to where you do a phone call. It doesn't have to be a long drawn out meeting where you go to the office. But if not, at least every renewal, you need to talk to your agent, because a good agent's not going to assume that everything is exactly the same today as it was a year ago. So the more properties you have, the more likely there's a variable, there's a change. Just like the lady who moved out of her house, like a few months after we wrote the policy, we didn't even have a chance to follow up with her. And she kept the house, but it was vacant. These are things that the agent should be proactive, but also you as the real estate investor, you should be proactive. The agent's not a mind reader, but also the real estate investor, they might not know what they need. So if you think there's any change, at least email or text or call your agent, depending on how, we try to make it as easy as possible to reach out to us. If you like to text us. If you like to email us. If you like to call us. I would say you don't need to overdo it. Like if at least once a year at renewal, but if you have a lot of properties, you could check in every quarter.
Okay. That's fair. And, just as we start to make like a holiday gift and wrap it up, what would you say we should consider, or go ahead and impart any final wisdom or anything? And by the way, if anybody does have any questions, feel free to comment, or you can text it and I'll ask on air. But also, if you're not the kind of person that wants to, get out here and comment online or anything, because I know there's a lot of creepers out there, a lot of lurkers. You don't like to get involved, but you will come and you'll ask me something after I'm off air. Just like I want you to do that to Wayne too, right? So at the bottom of the screen, you're going to see this ticker that has not only his website, and if you go to the website, it's got the text line phone number, but I can only do so much with that banner. Or you can actually reach him by phone. That's 318-423-7445. He's licensed in 5 states. So, just kind of giving him that little bit of information there. And if you found value in the information that he's shared tonight, give us a like, give us a share, let him know, because I think that, with a little bit of support from people, maybe, just maybe, I could get Wayne to come back on one night and I'll shut up. I won't even ask the questions, but maybe have him do a presentation about how he would build out a policy for a rental.
Yeah, anytime, man. Just let me know. I'd love to. So I guess to close, what I would like to say is I would recommend, and this is the advice I gave you the other day, is for each company that you have, for each LLC, it is wise for you to keep all that with one agent. So if you have a bunch of different LLCs, whatever, use. The reason why I say that is because if you have one agent, they have a bird's eye view of your exposure. Like if you have a policy over here and another one over here, it's like I'm trying to basically create a program, and if I don't know what's going on with this other policy, how do I know if I'm giving you the right coverage on this one? So I know there's a lot of questions. There's so much we could go over. This could be like a 4-hour, like Joe Rogan type thing, but people can only stand listening to insurance talk for so long. So I would say, put your LLC, all your stuff, find an agent you trust. They're going to try and get you the best rate because, you can shop around and move all your stuff to another agent. A good agent's going to try and get you the best deal and the best price. So my suggestion is use one agent for all your stuff. There's discount opportunities if you do. There's comprehensive risk management available. And also it's a much easier claims process. And also you can build a relationship of trust with them. So that's what I would say is try to find someone you trust and give them all of your stuff, because you're basically you're building an entire thing. It's not just one thing here. So your policies work together, kind of like Voltron. All these pieces come together to make one big thing. So, or the
I was just going to say it's like a leg of a chair. It's very important to have. But if you wanted to go pure on nerd with it, then let's go ahead and start talking about Voltron.
I love it. So that's all I got to say. This QR code is if you want to get a quote, you're more than welcome to reach out to our agency. This right here will just take you to our website that'll let you put in information about properties if you want. You can always screenshot this if you want to take a picture of it later or whatever you want to do. But this right here will get you to where you can give us information if you want to get a home quote in any of the 6 states that we're licensed in. We can help you. So, yeah, that's all I got. Unless you got something else.
I said 5 states earlier. I apologize. So, all right, it looks like we're going to go ahead and wind this down. I'm going to work to get this available for replay. So if anybody caught the tail end of this and didn't see everything, I'm going to try to make it to where it's available to go back, because I feel like Wayne really dropped a lot of great knowledge for us on this tonight. And if you are interested in coming on and kind of sharing your experience, obviously, if it's related to real estate, you'll probably get my attention a lot faster. So let's try to keep it like that. And I just want to say, Wayne, thank you again. I appreciate you coming out here sharing this. And if you or any of the viewers have any questions for Wayne, again, just screenshot that QR code, reach out to them, or by phone, text, email. They've got so many ways to reach out that if you don't get a hold of them, you're just not trying. So y'all have a great night. Thank you all for your time, and I look forward to the next stream.
Awesome. Thank you.